Thank you for joining us on the program. I'm Temple Ashaju. Ali Kansaju, the CEO and founder of Rich Frontiers Management in Nairobi, Kenya, joins us from that region. Thank you for coming through this morning. Joshua DBC, he also joins us as the banking analyst with Vetiver Capital Management. Thank you for coming through. Ayodeji, the head of retail investment, Chapel Hill Denham Advisory Bank. Thank you for your presence on the show this morning. Now, let's begin with the markets, where Nigeria was up yesterday by 0.98%. The BRVM stock exchange slipped 0.04%. The Egyptian stock exchange in Cairo jumped 2.20% as the Nairobi stock exchange in Kenya inched lower by 0.09%. The Johannesburg stock exchange also moved lower by the same margin, 0.09% on Wednesday. Eastern African headlines. WPP Scan Group founder Bharat Thakur stepped down. Centum Investments expects full year 2028 net earnings to be 25% lower. You've got Mozambique Air suspending flights to Kenya with effect from March the 29th, that's coming Monday. And of course, MTN Uganda posts 9.5% revenue increase to 1.98 trillion shillings in 2020. Rwanda's the Trade Permanent Secretary, German Ambassador, orders visiting the e-commerce center at Sawa City. Let me come to you with these headlines in the Eastern African space, Ali, to help us make sense of them this morning.
Yes, good morning, Temple, and good morning, everyone. There has been a lot of activity at Nairobi Securities Exchange. We're in full earnings season swing. This morning we had Standard Chartered report their full year earnings. Earnings per share was down, I think, 33.6%. A 6.7% increase in credit provisioning, but interestingly maintained a pretty good dividend payout, which means Standard Chartered has a yield of about 7.77%, which is high and handsome in the current environment. Of course, the banks had found it difficult because last year was the pandemic year. But for me, I thought those were respectable results, and I think I would be looking at that share over a 24-month period. We also had a full year result from CIC Insurance, which is one of the smaller insurance companies. They reported a loss per share of 11 cents from a profit previous year of 12 cents. Headline numbers, premium written, all looked okay, but they reported a full year loss. They've been trying to sell some land to liquefy the balance sheet. That has not happened yet. Now, your headline, WPP Scan Group, this is a Pan-African advertising agency. It was founded and set up by Mr. Thakur. WPP a few years ago took a majority stake in the business, and essentially Mr. Thakur is now stepping down. WPP have inserted one of their employees as the chief executive officer. In the announcement yesterday, they said the inquiry into Mr. Thakur would continue. So a lot of drama in that space. About 3-4 years ago, they made an entry into West Africa, largely following the big telcos like Airtel. But this is a significant development, but Mr. Thakur has chosen now to step down. Centum, interesting quasi-private equity business. They're expecting full year earnings to be 25% lower. They've got a big real estate development going on. They've got the flagship mall development in Nairobi called Two Rivers. They tend to be nimble, but obviously they could not be nimble enough last year. Mozambique Air suspending flights to Kenya. This was nothing to do with COVID, which, by the way, is pretty rampant here. We're in our third wave here. Daily numbers are the highest they've ever been since the pandemic began. Similar situation in Ethiopia. Of course, Tanzania is a statistical black hole, but overall, East Africa, Kenya, and Ethiopia under a lot of pressure, talk of extension of curfews, and some folks talking of a possible lockdown in Nairobi, but I don't think that will happen simply because the economy couldn't take it. MTN Uganda, 9.5% revenue increase. Look, these are the best days for telecom companies, right? Demand for data, demand for mobile money. If you're not increasing revenue in this environment, you might as well shut up shop. MTN has done well overall in Africa, and I think this is a sweet spot for them. Rwanda, visiting the e-commerce at Sawa City. Look, you know, we've spoken about Rwanda frequently. They're nimble, they're agile, policy making is fast, and notwithstanding the fact that in terms of the East African community, they represent about 3% or 4% of the GDP. But, you know, this proves to you when your policy making is agile, you can pack a much bigger punch than your GDP. And sometimes I look at them and I wish more countries, and I'm sure you think the same, would be as agile as Kagame's Rwanda.
And let's hope that Kagame is grooming someone to take over later on.
That's a different question entirely.
Thanks a great deal for those analysis, Ali. Let's move on now to the Western African markets, where you've got the NEXIM Bank of Nigeria announcing the first raw cocoa beans exports out of Calabar port. NGRs AfCFTA team meets stakeholders, visit locations in Lagos. Dangote Cement's Lafarge earnings excites Nigeria's market. Dividend finances in focus, and of course the Stanbic IBTC bank in Nigeria got its gross earnings rising 0.27%, profit after tax up 10.9%. Ghana's $5 billion Eurobond, 0 coupon, 4-year maturity, and 3 tenors are the terms coming with this offering at this time. You also have Ghana hosting the regional training of central bank officials very, very soon. I'll split these the Nigerian focused headlines into two between Ayodeji and Joshua. So I'll give the macro headlines to Ayodeji to deal with, while Joshua will help us to handle the corporate the headlines there. So Ayodeji, you've got the NEXIM Bank raw cocoa beans, and of course AfCFTA team kind of revving up support for the initiative. What will this mean for Nigeria?
Yes, I think it's a cheering news amidst a lot of the negative news that we've had to be dealing with in the past few weeks. And we all know that there's one solution that we need, fundamental solution we need to our FX crisis, is our ability to generate more exports. So with this news on exporting raw cocoa beans, especially out of the Calabar, which also is another positive one, that it doesn't have to come down to Lagos before it can be exported, which would decongest the Apapa port. We believe that this is positive. But beyond because we're used to exporting raw items, can we also look inwards? Because when we talk about generating jobs, can we begin to look inwards and to see how we want to be adding value to these raw materials, so we don't end up exporting raw cocoa beans and we continue to import the finished items in the form of chocolates, Milo, and the likes. So I feel that yes, this is the first step in the right direction, but we need to we need to create jobs, and this is very critical. The manufacturing sector needs a major role to play this, so that we may even be exporting those finished goods and still continue to earn FX. So we would have generated more jobs and would also have also generated the FX. Secondly, on the news on the AfCFTA team, that's African Continental Free Trade Agreement team coming to Nigeria and visiting the location. I feel that yes, we just have to key into this. We've been looking for the market. So when I look at, even when you look at some of these exports, the standard currently we may not be able to meet up with the quality that they require. But if we are also exporting within our African countries, it may not be as high as that, and over time we'll be able to also meet up with global standard. So we just have to, in the light of also trying to create jobs and so that insecurity can be tackled, we need to accelerate this and also begin to leverage significantly on the opportunities that the AfCFTA presents for us to be able to export to other African countries, which eventually is the FX, because we need to diversify our FX revenue from oil.
I appreciate that analysis, Ayodeji, but thanks a great deal. Bosun Amofaya, Executive Editor at Frontier Africa Reports, just joined us in the course of this program as you were speaking, Ayodeji. Bosun, thank you for coming in. But Joshua, let me bring the corporate headlines we have here in the Western African trade to you. You've got Dangote Cement and Lafarge. How exciting are these headlines to the markets at this point in time? It was early mentioned earlier that Stanbic IBTC earnings came in Kenya this morning. This also feels like a coincidence, what the one we have from Nigeria.
Well, I think the experts are here, Ayodeji and Joshua, when it comes to those big earnings. I think I will just take a bit of what Ayodeji was speaking about, Nigeria exporting raw materials and getting to production. I think I'm a whole lot more inclined into production, industrial manufacturing right now, because again, on the side of what we have and leverage what we and all that. So I think it was a good one with what NEXIM has done. We're planning to speak with the managing director of NEXIM later today to have more insight into what had been done. The deal, the $50 million deal, which was signed between NEXIM and AfCFTA Bank, which was announced yesterday, is also a big news. We want to find out how this $50 million fresh dollar raising for NEXIM Bank will help Nigeria exporters and maybe importers as well in moving forward. But I think what they did yesterday was to demonstrate that you can export from Calabar port and not just concentrating on Lagos. You know the problem we all have right now in Nigeria, the Lagos port, Tinkan Island and all that are shut down for 2 weeks. That's Africa's biggest economy and Africa's largest seaports are shut down for 2 weeks. That should make headlines everywhere in the world. But it looks like it just passed under the bridge like, well, nothing happened because we're just trying to make things work. So how much are we losing for 2 weeks in shutting down this massive seaports in Lagos is anyone's guess. You know this will run into billions of naira, hundreds of millions of dollars, if not more than that. So where does that take us? So I think somehow the private sector are working with NEXIM Bank, Nigeria Export-Import Bank, and try to find how they can leverage other seaports. For example, if those cocoa had been coming all the way to Lagos, maybe from Ondo State, maybe from Ekiti State, wherever they're coming from, to get to Lagos alone, Lagos about the expressway and whatever is going to be, and then into Lagos. So the best way for them was to move all the way and say, we're going to export this through the Calabar port. And in a manner of saying, way, it makes sense. But again, look at the distance from the southwest all the way down to Calabar and Cross River State. So we need this rail as fast as we can do. We need cargo that can move things of this nature, you understand, that can move this and get it to the seaport on time. So these are areas in which we think the NEXIM Bank is now working with AfCFTA Bank and a few others to see how we can leverage exports. Again, Ayodeji made a point in which you can do some beneficiation locally and take bold steps like the Ghanaian president has just announced about a few weeks ago that they're going to do some of the cocoa in the country into paste. The Ivory Coast made the same, the Ivorians made the same decisions, and I think Nigeria, as a third or the fourth largest cocoa exporter in the world, should make a similar decision right away.
Thank you for that, Bosun. Thanks a great deal for that. Joshua, we've got the Dangote Cement and Stanbic IBTC earnings before we quickly moved on to the Southern African markets.
All right, what I will say quickly is, first of all, on the Stanbic dividend payout, it's very impressive, coming from 2 naira, which they declared last year for 2019, to 3 naira 50 kobo this year. It's by far the biggest dividend payout, although the dividend yield is not the highest amongst all the banks, just due to the fact that obviously Stanbic are currently trading at their year high price, and dividend yield is currently at about 8%. So we're still below the about 12% that you see for Zenith Bank. But overall, it's a very impressive result, although their audited financials did not change much from what we saw with the unaudited. But overall, I think definitely they're returning a lot of value to the shareholders, and a lot of people are paying attention to that. With regards to Lafarge and Dangote Cement, very quickly, I would say that Dangote Cement definitely impressed a lot more with regards to meeting up with analyst expectations in comparison to Lafarge Africa, who sort of underperformed a little bit. And again, coming off the pretty significant high of 2019, where they sold off a significant portion of the South African business, and that really added a lot to their bottom line overall, to come down to just giving about 30 billion in bottom line this year. But overall, they still gave out a dividend, even though it was only 1 naira. I think Dangote Cement definitely did more with returning value to shareholders in that regard. But I think overall, investors are still very happy, because things could have been a lot worse when you look at where we were coming from around this time in 2020. I think definitely investors will be happy and will be encouraged that this year will be a lot more, and they would receive a lot more value by the end of the year.
Thanks a great deal for that, Joshua. Let's move on to the Southern African headlines. South Africa's inflation eases to 2.9% in February from 3.2% in January. South Africa's treasury reduces weekly debt auctions by 2.6 billion rands. Got Satrix winning 10 ETF awards in South African markets. Lucara executes $220 million financing facility for Karowe mine. And of course, in Zimbabwe, you have Innscor revenue up by some 774% to 27.7 billion Zimbabwean dollar there. And the Namibian government expects a $603 million in dividends this year, says the Treasury. That's an update coming from the Treasury. Ayode Jebo needs to leave soon. So let me get your thoughts on the South African inflation easing to 2.9%. Does this look like light at the end of the tunnel for the economy of that country?
Okay, so I think that it's positive for at least the country has also been going through a lot on the back of the COVID-19 pandemic. And if we still see in terms of the growth rate, they've also still been struggling. But we know for most of these countries have higher capacity to rebound because of the structure that they have, and very direct transmission effect of whatever policy government is putting in place. So looking at the inflation rates down, which I think is positive for the country, and what they would just have to do is to just accelerate and intensify efforts on having more inclusive growth rates, because when you look at the impact of inflation, it's that it would minimize at least cost of living and improve standard of living. And when we want to compare that to Nigeria, because we're always very quick at comparing in terms of size to South Africa, but when it comes to, when you look at some fundamentals in terms of numbers, we are trying to for us, we're struggling with stagflation, low growth rates, high inflation rates, high unemployment rates, which you know that's in the mystery index very high. So I think there are some things that we also need to look up to and copy from some of these African countries, so that you have the likes of Egypt look at their FX management, show how they were able to resolve it, and it's helped them attract a lot of investment. So I think overall, I feel that it's positive for South Africa, and I think they should be able, they'll get out faster from the troubles of the COVID-19.
All right, and thanks a great deal for that. Ali, you have the rest of the headline, a couple of corporate stories in there as well.
Yes, so just to add to what Odiji was saying, I was looking at the food inflation numbers for South Africa. They were very high, so it's quite interesting that the headline number well behaved, and I think that probably speaks to a number of things: relatively industrialized economy and a low demand pull at the moment in that economy. That headline about South African Treasury reducing weekly debt auctions by 2.6 billion rand, you see, that's great signaling to the markets. That's basically telling everybody we don't need to sell as many bonds as you thought we did. And therefore, it speaks to what the resilience in the rand of late, particularly when we watch the shenanigans in Istanbul and the Brazilian real. So the rand has actually outperformed its emerging market peers. And I would say that's also a consequence of the communications coming out of the South African Treasury. If I can just touch finally on Innscor revenue up 774%, that's a tremendous outcome, and I think we've got to dig in a little bit deeper into that. That's might be a very important signal coming out of the Zimbabwean economy, or it might be a very important signal coming out about Innscor itself. The Namibian government expecting 603 million Namibian dollars of dividends this year. I think that's going to look quite optimistic given the growth trajectory we've been on in Namibia, not just last year, but for a number of years.
Right. Thank you very much for those, Ali. And the Northern African markets now, Telecom Egypt raises a proposed full year 2020 dividends to 0.9 billion Egyptian pounds. EgyptAir is to obtain 7 billion Egyptian pounds from governments this year. Morocco's total produce exports to UK grows 51% post-Brexit. And you have the official reserve assets expected to hit 310.3 billion dirhams at the end of 2021. Mohamed Menif is now the chief executive officer at the Tunisian Internet Agents. Bossing, quickly, your thoughts before I bring in, give us a thought first.
I think I'll speak to Morocco's trade deal with the United Kingdom up by 51%. What were the exports, the produce that Morocco is sending to the UK, by the way? Look, we need to cut a deal. The Kenyans cut a deal with the British post-Brexit. The Ghanaians cut a deal with the British. Yesterday, in the earlier story, the permanent secretary for the Ministry of Trade in Rwanda was with the German ambassador and a few other officials. They toured the e-commerce center in Sawa City in Rwanda. Look, everybody's moving fast and furious. Everybody's going across the planet looking for handshakes across the economic borders and frontiers. Look, we need to do something significant and strong in Nigeria. Give me the figures from Morocco, with this affinity they've always had with Europe, and Brexit is not likely going to change anything. So they still remain very glued to their European friends and allies. But they say, look, we can't let go of Britain, by the way. So they continued on that trajectory as well. So it's a win-win situation for this North African economy.
Thank you very much for that. Ali, your final word. You've got the Egyptian Air looking to take some 7 billion Egyptian pounds from government. Where is that going to?
Just quickly, if I can add to what Garson was saying, this Morocco story, when you contextualize it, what's happened, Europe, UK, United Kingdom, post-Brexit, you've seen a sharp slowdown on that side. And I think it speaks to Morocco being pretty sharp folks that they've managed to step into the breach. And I think that's a significant increase and speaks to the opportunity for other countries, like Garson is saying. There is an enormous opportunity here for trade with the United Kingdom, and I wholeheartedly agree with what he said. EgyptAir, interestingly, spoke about expanding their network on the African continent, I think about 48 hours ago, asking for 7 billion. Look, you find me an airline which made money last year and didn't go to its government, and I'll eat my hat. I mean, every single airline, Kenya Airways came out with some very poor numbers as well, and is looking for about $500 million from the government as a minimum. But I'm sure EgyptAir has got a good plan. This was an airline I remember using many, many years ago when I was at school in the UK. It was the cheapest way to get back home to Nairobi. I think it's in line with what we're seeing in the global airline industry. And given the number of tourists that come to Egypt, you would have thought they need a proper airline. Thank you.
Thank you, Ali. Thank you so much. Thanks for those analyses, and thank you for being on the panel this morning. Ali Kansaju, the founder of Rich Frontiers Management in Nairobi, Kenya. Also, number 5 year executive editor here at Frontier Africa Reports. You came through eventually. Thank you. In absentia, we'll say thank you to Ayode Jebo, the head of retail investment at Chapel Hill, Denham, and of course the head of banking analyst at Percival Capital Management, Joshua Debisi. Both of them had to leave for other engagements. This has been Frontier Opening Bell for this Thursday. I'm Temple Ashaju. Thank you for watching. I'll see you next time.